Hey everyone, this is Finding Value. I'm going to talk a little bit more into uranium. And we're going to look at potentially when this market's going to be kicking off, which I did another clip on. But maybe there's some information, new information about uranium that I'd like to share. So we may also go into just how big this thing can be, this bull market. So let's look into it. I've got here, it's all about uranium, baby. So this could be the biggest bull market in history coming up. We've got annual global demand for uranium is currently 150 million pounds. About 85% of that is met through long-term supply contracts. This means 37% of U.S. power utilities' uranium demand is uncovered for 2022. That represents about 9% of global demand. So according to market analysts at Red Cloud Data, we forecast a historical supply deficit opening up in the next decade, starting at 31 million pounds in 2022 and rising to more than 100 million pounds by 2034-2035. So a huge deficit coming up. More than half of the world's uranium production comes from just 10 mines. Canada, the second biggest uranium producer in the world, hosts the world's biggest, the McArthur River uranium mine, while Kazakhstan, the largest uranium producing country, operates 3 of the top 10. As of 2015, about 650,000 tons of reserves are recoverable at $40 per kilogram of uranium, while 7.5 million tons of reserves are recoverable at $260 per kilogram. So this is the total nuclear capacity that we have in the world, and then we've got the time here. If you notice, we're at 2020-ish. So we've got a huge capacity coming. China's adding a whole bunch. Indonesia, Taiwan. I mean, it's just exploding bigger. And then China here is just insanely growing. So it's going to put a large strain on supply, because we're going to have to mine our way out of this. So what does the market balance look like? And this is Red Cloud's market balance. We've got uranium price, kind of the prediction here on the right, long-term price. We've got spot price here. And then we have the demand-supply balance here. So we had a very small imbalance back here, which created a massive price move. We then had Fukushima. We had some decommissioned missiles. We had some inventory. And you could see the balance stabilized. And then the Fukushima happened, and then all that inventory came out. Again, 2020, we're right at an inflection point between, we'll call it a surplus to deficit. And right now, I think, is a sweet spot to be looking at uranium, to pick up some uranium mining companies. Because going forward, if you look at this deficit, I mean, it grows, and it grows substantially. I would say that the first major substantial, supply deficit happens in 2021, which is right around the corner. I mean, it's right here, right now. So we've got this deficit coming. It's in our face. They expect uranium prices to basically march higher from here on out. 40, 50, 60, 70, 80. They're saying, $90 at a nice, easy clip. But I look at this and I see some huge deficits. This little deficit caused this scare. I'm sure they're being conservative in their estimates here. So we'll see what happens with that. Here's another way of looking at it. We've got demand here. These are all these different countries here. China reaches 200 gigawatts. India reaches 63 gigawatts. And then we've got our supply that's going to diminish and pull back. So we've got demand surging higher, supply dwindling. Here's previous bull markets. And I think it's important to understand the previous bull markets because it gives us information about what the future could have, what in terms of prices. So if you notice, whenever you have low prices and you're under the cost of mining, you'll get these surges, or this is an oil crisis, but you get these surges. And whenever it stays under the price for a very long time, mining cost, it surges higher. Now, we're coming up where we've been under the mining cost for a little bit. And I'll show you what those costs are in the next slide, the mining costs. But if you notice, prices were mainly under $60 this entire time over here. We also know that the demand is going to explode going forward in 2020. And this is 2020 here, the surge in price. So we may have already started that surge. So looking forward here, this is the costs of uranium, mining companies. The costs are on the left-hand side, and these are different producers through here. This is all BHP Billiton, Uranium One, a whole bunch, Kazakhstan, all through here. So, and there's Camco up here. So these are the big mines over here. They're all under, $40. This is the $40 mark. But then we've got all these mines up here. And this is the rate that they produce. So these are the big boys. They get you out here pretty quick, and then a lot smaller miners up here. So we're looking at $70, $80 up here for the higher cost producers, and we're looking at about 150 million pounds. If we were to go back to look at that supply balance, all of production at $80 is 150 million pounds. This is in million pounds here, and they're projecting a 100 million pound shortage. I don't know if that's even possible to make, to increase supply by this much. So I think maybe somewhere in here, like a 25, 30 million pound, I'd say 2026 prices are going to go probably ballistic. So we're looking at like a 2026 time frame. And here's a uranium price sensitivity analysis that I threw in. A lot of miners are losing, they're losing money right now at a $30 price range. We just saw that with the high cost producers, because these are the big guys over here. I mean, they're producing well over 100 million pounds. And then all these little guys, they're losing money. $30, they're not making any money over here. And that's what we're looking at. So we look at, they're losing $30, but at $40, they're getting a little bit of money. And then it just explodes higher. Now, if they're making $1 here, or just call it $1 million, this right here, from here to 100, is a 2,000 times gain in their profit. 2,000 times gain. And that's at $100. So what I want to get to is, there's a couple of things here of how big this bull market can be. We've got a massive deficit coming. We can see it. I don't know if they can even mine that large amount on top of all of those other huge producers already. If those 10 mines start to decline, I don't know how you're going to replace that lost production. You're going to have 100, 200, 300, 400 more mines, and I don't know if all of that uranium exists in the world. Maybe they'll have to start taking it out of the ocean. I didn't look into how to get uranium out of the ocean and what the cost, that price point is. Maybe that could be another video. But, to keep in mind, if uranium is very inelastic, it's a very small percentage, the uranium cost, in relationship to the total cost of nuclear power. So you've got this inelastic kind of demand for it. So if you're running that large of a shortage in the future with inelastic demand and supply, which will not come online quickly, this bull market could be the biggest that we have ever seen in any form of any form of bubble, so to speak. This could be one of the biggest up moves. Now, if you look at this, and I still have this up here, if we're like here, where they're not making much money, we can put our money in some of these uranium companies, now, hold on to it. And I don't know, maybe this price gets to 400 or 500 in terms of dollars per pound. Maybe it's 1,000. I have no idea. At 1,000, that means that if this company is making hardly anything today, and this is a 2,000 times return at 100, I mean, maybe you 5x it. Maybe it's a 10,000 times return. 10,000. Now, some of these companies, what if it's 200,000% return? These numbers get so big that I don't even know how to rationalize it. They're so large. And I don't think focusing on the returns, I get it. What I think we need to focus on is a strategy. So what should our strategy be going forward? My strategy would be sprinkle. Sprinkle, 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 sprinkle. If some of these companies go up 100,000 times, you put some money in it. Then you put some money over here because they have a good deposit. Then you put your money over here because they have a good deposit. You might put your money with a good management team. Wherever it is, sprinkle your money out and capture the majority of these companies. I'm going to put in the link some of the companies that I am invested in and companies that you should be looking into for your portfolio that are uranium mining companies. So sprinkle it out, get some money. I don't care if it's a few $100s in each. Does not matter. Get some in there, sprinkle it out. We only need a few of these to go crazy. The last uranium bull market, all of them went crazy. Now you're just sprinkling it about to get the ones that go the craziest up. And the whole boat will rise. So this is finding value. Hopefully this has changed your outlook on uranium mining. This bull market is going to be gigantic. You got to put some money in here to participate in it, in my opinion. Subscribe. I do lots of videos about uranium and market updates and timing purchases. This is something that if you're subscribed, you will get this content in front of you. I think it's extremely important to get this in front of you. Rate the video, leave comments. If there's something you want to see, leave it in the comment section. I'm glad to do a video on it. So hopefully you have a good day, and that's it.